Hello, everyone, and welcome to another edition of Tone's Market Analysis. And this will be a special episode because I'm not going to be talking about the technicals in the market because nothing really happened the last 3 days. I will be spending this time talking about fundamentals and some of the general economics. Today is Sunday. It's about 9:30 p.m. Eastern time, and it's a Thanksgiving weekend, so it's November 27th. Okay, so a few administrative notes, my upcoming events. So here's my website, here's the calendar. I will be attending but not speaking at the Blockchain for Wall Street conference on Tuesday. I will be in Chicago speaking at the blockchain conference on Wednesday, and then back to New York to speak at the Quantech Distributed Ledger Technology Conference in New York once again, December 1st and 2nd. So if you're around and plan to attend these events, you can catch me there. After that, I probably will not make it to CES. I was thinking about it, but not going to. I will be in Acapulco at the end of February. That's the annual conference in Mexico. But I haven't added this to the calendar yet as it just got finalized. I will be a speaker in Toronto on February 6th. They have a very big meetup there, gets a few hundreds of people to attend, organized by Sunny Ray of Uno Coin out in India. So I will be out there doing my Bitcoin speculation presentation. All right. So let's jump to the fundamentals. I will do one chart. You know what? Let's do one technical thing first before jumping into the chart. So in the comments, somebody had said a few days ago that for me to take a look at a long-term weekly chart of gold because they had said that gold is at strong support. And I did. So what I did was, by the way, I will be transferring all my charts to TradingView, so it will be a little bigger. But for this case, this is perfect. I hope people can see it on their end. But set the video to HD quality if you are watching these. Okay, so here's the chart. So I'm not even looking how the futures are opened right now. I haven't even opened that up yet. Now that I've said it, I guess I'm a little curious how the futures have opened, but I'm not even gonna check. Let's. I want to get a good night's sleep today. I'm assuming nothing happened. So the person had said that 1200 is strong support, and I can see why people might think that because I can draw a line right here. I'll drop the arrow in a second. No, I'm not gonna, yeah, I'll leave the arrow actually. I can draw a line right here, and it looks like decent support. But here's the problem. So I make this green. So this is great. We bounced right off of it. We touched the 50-week moving average, and we went to all-time highs, not adjusted for inflation. And after that, it was support. It was support. I guess let me make this yellow. I'll leave it a circle. You know what? Let me make it a rectangle. And I'll make this yellow. This is questionable right here. And the reason it's questionable is because we pierced it for several weeks in a row and we bounced back, but we never made new highs and we stayed under the 50-week moving average. And then we fell below it for a significant amount of time. So to me, this should have became strong resistance. And for whatever reason, call it, I don't know, the election scare or call it fear mongering, for whatever reason, I'm trying to think of a good color, but I guess we'll make it green. and a box. For whatever reason, this happened. Look, to me, this was the anomaly. In fact, I'm about to lose a bet unless gold collapses, because I made a bet with someone around this time, right? Yeah, like around this time, that gold was going to go under 1,000 in 2016. And I was very, very confident in that bet. And I was clearly very, very wrong. And I was at a conference in early February in Mexico where I talked about, buy equities, you sell gold, buy equities. I was very, very sure, maybe a little too confident, that gold was going to do this from this area. Like I didn't think we were going to break it. I didn't think we were going to go up that high. Like this is what I was looking for early this year. And gold went up, and then it hit its declining. It even went above the 200-week moving average, made it just under 1,400. Got all of the doomsdayers. The world's going to end, and everybody with gold is going to be trillionaires. Got them all riled up. And now we're back down, and we're back under 1,200. And I think this is where we belonged. So if gold would have done this, if gold would have fallen to like 900 this year, I would have been all bullish gold into 2017, but that didn't happen. So now I'm very bearish gold into 2017 and possibly even into 2018. Who knows? Because look at this. You can't deny this. Look at the volume. Look, going back to 2003. This hasn't happened before. This is close. This is the last time we've seen anything like it. And look what happened since then. By the way, this corresponds to this, right? This corresponds to the break of the moving average. And this happened at like 1,500. Well, let's say 1,400, right? And then we fell an additional like 300 points on gold. And now the bearish volume is even weaker. So I'm expecting a bigger drop. So if this led to a 300 downturn over the next 3 years, what else can I say? I really don't want gold to be going down for the next 3 years. I don't think it will be going down for the next 3 years, but it's possible. And a 300-point drop from here is certainly possible. And a 300-point drop would put us at 900, which is where I expect it to be early this year, early in the year too. So where is there support? I'm going to make these green. So to me, this is very reasonable support. Very reasonable support, because it took 1, 2, 3, 4. On the 5th try, we finally broke out. And we never looked back, and then we doubled in price. That was a 2x break. And we almost came back and bounced off of it. And had we bounced off of it right here and went up, I probably would have been bullish. But we didn't. We missed it. So now if we fall to 1,000, we may be too close and then hit a double bottom. And I'm not a big fan of double bottoms. So to me, that's reasonable support. Now, let me show you amazing support. I'll make the sticker line. This right here is amazing support. That's the support I'm looking for. And here's why. It took an extended amount of time to break above. Oh, you know what? It's a perfect time to draw a triangle. Love my triangles. Haven't been drawing them at all. Let me see here. You can draw both asymmetric. Well, how do you draw a triangle? Okay. Don't I need one more point? All right, well. Having technical difficulty. 1, 2, and 3. There we go. Okay, here we go. And I don't even know why it's yellow at this point. If it's a triangle, it should be green because this is an ascending triangle. Right. And the width of this triangle was what? 100? It was fairly high. So I'm not surprised we hit this target. It was probably about the same, a few hundred points. Yeah, I could have even extended this triangle to the left a little bit. And we finally broke out, and then we came back and did a full test, like a full test. Right? Why am I struggling here? Circle and green, and we're good. Did an amazing back test right here. Probably scared a few people too, but it was a good back test compared to this initial resistance. Okay, so to me, that's an amazing backtest. So had gold hit 1,000 and bounced off in 2016, I probably would have been bullish going forward. I understand that the moving averages may cross, but they're going to cross temporarily if gold continues to go down. And if we break below 1,000, things can really escalate quickly. I mean, love quoting Ron Burgundy here. I mean, it can really get out of hand in a hurry and do this. And even if it does that, it can also rebound very quickly. It can also rebound very quickly. I believe on a podcast the other day, I said I will be bullish gold when people like Peter Schiff and other people that preach gold and also sell gold and profit on selling people gold, when they start getting litigation, when they start getting sued, when people that they've been listening to for like 20 years finally get fed up and they start suing them, I think that's when gold will finally bottom, and so we'll see. So I am expecting new highs in gold, but that's only going to happen after people get very, very, very pissed and frustrated. So I think I already spent way more time on this than I planned on doing. I wanted to spend this entire episode on not technicals, but fundamentals. And in addition, I mean, you still have plenty of room. I'm looking for this. And I'm looking for it to maybe even be even lower to kind of confirm. Or maybe you'll get some divergence. I mean, that would be nice. But if it falls quickly, again, I don't know if 1,000 will hold it up or 700 will hold it up. But I don't see any support between 1,000 and 700. So if it rebounds somewhere in between, I will personally be caught by surprise. Like if we're breaking 1,000 with some strength and some volume, I'm going to set my buy target at 700. I mean, I'll probably buy some gold at 1,000, and I'll definitely double down at 700 because I have no idea how far it can go down. And hey, I can always be totally wrong. This golden cross may cross for the next 20 years, and then we go up. I just don't think we will. Also, again, you got to look at how bad things can get. You got to look at your worst case scenario. And you see this right here? There's absolutely nothing stopping it from happening again. I mean, that was a pretty big escalation, and this escalation took what? That's 6 months? Yeah, about 6 months, right? So we're looking at 6 months right here. So in this 6 months, how much did we fall? We fell from 1,700 to 1,200. So that was a 500-point drop. So if things escalate like that, and that's a 500-point drop from 1,200, and guess how much that is? That's 700. So that's my ultimate target. Can it go lower than 700? Yes, it can. And you have to watch a lot of my other videos as to why I am generally bearish on gold. But hey, guys, I do have some physical gold, and I'm not selling, right? I mean, it's shoot, I diversify too. Who knows? I still that gold coin may come in useful. who knows? But yeah, I haven't been buying gold in the last 3 to 4 years. I've been pretty bearish the last 3 to 4 years. But yeah, it'll turn around eventually, but not yet. All right, so now let me get to what I was planning to talk about this entire episode, because I don't want it to go on too long, but they always go on longer than I expect. All right, so oh man, where to even begin? Let's begin with China. So, no, let's not begin with China. I want to save China for the currency stuff. All right, let's begin with jobs. So, and this brings us, everything is like connected to each other. So I'm like debating the best way to begin. All right, so let me show you guys how badly Fed screwed up. Okay, so generally, the Fed would, I don't really have arrows here, but generally the Fed, I'm going to ignore this. Let me just get purple here. I'm going to ignore this. Whoa, that's a thick line. I'm going to ignore that. Basically, this whole thing. I'm going to remove it from memory. We're not in like late 70s, early 80s, 20% interest rate scenario. So let's stay with a normal environment. So the blue line is the labor market conditions. These are basically like the job reports. And the red line is the Fed funds rate. And this is where Fed screwed up. So normally when things start to look good, wow, that color is really not working on this chart. Is purple going to be better? Yeah, I guess. Normally when the jobs start looking good, Fed begins to raise rates. And then the jobs start to look good again over here, and the Fed starts to raise rates. And then once again, and then, when things get bad, the Fed drops rates. Once again, things are looking good, and the Fed begins to raise rates. Things start to look good, the Fed begins to raise rates. And if you've been around the markets for a while, I mean, the Fed was blamed for raising rates over here, this rate rise. They were blamed big time for raising these rates too little and too late. And now, look at this. This is when the jobs started getting good again. But what did the Fed do? They raised rates? No. And this is a problem. Because now we are here. So what do you do? I don't know. And I'm very happy I don't have that job. Because the rate should be somewhere here. I mean, I honestly don't know what the rate should be. I think it should be left to the free market. But since we do have the Fed, and this is what the Fed should have done. But they didn't. So they screwed up big time. So what they've done so far is this. And this is a problem. It's going to be a huge problem. I have no idea how they're going to get out of it. I can't really raise rates anymore. The only way they can't even lower rates anymore. The only way they can lower rates is if they eliminate all physical cash, which is what they're actually trying to do in Europe and the US, because they want to go to negative rates. Like the Fed wants to do this. Well, not now, but they want to do it if there's another recession. And if you think there isn't going to be another recession, you're crazy. And that's also another big problem with budgets, government budgets. They assume there will never be another recession for like 30 years. It doesn't matter, right? They can make a budget plan for the next 100 years, and they will not assume that there's going to be a recession. They just ignore that possibility, and you always have a recession. And they've all been taught that in a recession, you lower rates. So they're in major problems. So because of this, where are my rates? So now, okay, so I'm going to close this chart now. I think I've set everything on this one, and I'm not going to save. No, I'm not going to save. All right, we'll get to China later. Oh yeah, that's equities. And that's the oil bonds. Here we go. So because of this problem, bond volatility is going through the roof. So that's the VIX on the bonds. That's another neat chart. By the way, this is what I've been doing the last like 3 hours trying to prepare for this. So this is new. I mean, I kind of like doing these. So maybe I'll do one of these videos once a month at the end of the month. And maybe, I don't know. It's a lot of work, but it also, makes me catch up on a lot of the fundamentals. I mean, one person can only pay attention to so much. So here's another chart for you guys to look at. I mean, you can pause this video later and like read the Bloomberg description of it. But volatility is going up. Let's close that. And I'll get to that right after. Let's see here. Whoa. Here we go. So bond yields are going up, right? And the Fed, because the bond yields are going up, there is a 94% chance that the rate is going to be raised on, I think December 16th, they announced, like the meeting is like 2 days, right? So there's a 94% chance that there will be a rate rise and then a rate hike, and look at all the percentages. So the market is expecting the Fed to hike rates going into the future. And when rates go up, the price of bonds go down. So the market is preparing for this. And if you look at this chart right here, this is US Treasury since 2001. And this is foreign central banks have been selling US equity, US bonds like bandits. So when the rate goes up, the price of bonds goes down. And that's what's happening right now. So here's the interest rate, and it's going up. So yields are advancing, and this is the 10-year. That's the U.S. Oh, sorry, this is the spread between Germany and the U.S. But which is also interesting. It's approaching levels not seen since the early 90s. Okay, so all right, let's close this. Let's stick with bonds. Now, bonds are going to transition us into equities. So let's take a look at this chart. So this is, again, probabilities that the Fed is going to raise the rate. This is a slightly earlier chart. I think I took the snapshot when this was from November 4th. So this is back when there was only a 78% probability. Now it's in the 90s. And this is comparing what happened last year at this time and this year. So don't save. Okay. And here's another good chart of what is happening with the rates versus the US market. Sorry, this is the dollar chart. My bad. We'll get to this after. Okay. So is there a trade here? Well, it's kind of like catching a falling knife, so you have to be careful. So we're approaching a bit of an extreme in sentiment. So people are very bearish bonds right now. And the last time we reached these levels on newsletter sentiment, the market completely flipped. So you got to be careful a little bit in that there is a contradictory trade here. Okay, so this is the bond yield on the 10-year. And like I said, the last time there was this kind of bearishness, the interest rate fell a lot. fell a full percentage point from 2.4 to 1.4. Now, I don't think it's going to happen. But I do think there might be a contradictory trade here, and then we go back up. Okay, so let me close this. And we'll stick with the bonds. Oh, I should have just done it this way. Would have been much better to see what's going on. Yep, my last chart in the bonds. So this probably was my favorite chart that I put together. So what is happening? So let's take a look at chart number 2. So chart number 2 is weekly fund flows in billions. That's emerging market debt. So this is an outflow in emerging markets debt fund. And this also applies to the US bonds as well. So the bonds, so money is leaving the bond market right here. I mean, this is like a 13-year record drop. And if you look at chart number 1, this is the inflow of money into equities, inflow to financial sector funds. Okay, so this is basically movement of money into kind of like ETFs and into the stock market. And this is why I am unreasonably bullish the stock market. Because if you look at over here at charts number 4 and 5, this is how much money has made it. The blue line is how much money has been put into the bond market. And the red line is how much money has been put into the stock market, including ETFs. The bottom chart is completely insane because it excludes ETFs. So if you eliminate ETFs, look how much money has been put into the stock market since 2006, because since the crash of 08, everything we've ever heard is, the big crash is coming. So all of this money in the bond market is going to exit. If the interest rate starts going up and the price of bonds is going to go down, these guys are going to take this money out faster than they can try to do it. So where's this money going to go? Well, it's got to go somewhere, right? I mean, a lot of these are investment managers. They got to put their money somewhere. And a lot of it is going to go into the stock market, especially if Trump gets through with his tax cuts for corporations. And if we get an inflow of money into the equity market, I mean, we're talking double, triple current stock prices for pretty much everything across the board. And this is why I'm very, very bullish the stock market. Right, don't save that. Okay, we'll get to oil in a second. All right, so also speaking of the stock market, here's a pretty good chart, right? So the white line is, I thought there was one of these should have been S&P 500, right? Odds of a Fed hike, Bloomberg Dollar Spot Index. Oh yeah, okay. Yeah, so it's just rates of a Fed hike versus the dollar spot. Huh. Oh, it might be it's a Bloomberg Dollar Spot. That's why I'm confused on why these values are 1180. It's not DYX. Okay, that explains my personal confusion with this. So the value of the dollar continues to rise and is now reaching all-time highs. And the Fed rate hike is also going up, and the stock market is going up. And normally, the pundits on TV are screaming, well, if the Fed raises the rate, then the stock market's going to crash. And that's kind of ridiculous. Also, by the way, the Fed is raising rates because they're going to have no choice. The bond market tells the Fed what to do. The Fed doesn't tell the bond market what to do. The rates on bonds are starting to go up, so the Fed has to raise their rate. When during the crisis in 2008, when the stock market crashed and everyone jumped out of the stock market and put their money in the bond market, the free market dictated the rate of the bonds. So there was a massive entrance into government debt. And when you have a bunch of people buying up government debt, the price of debt goes up and yields come down because they are basically, it's like an auction. So people are willing to buy government debt at a lower and lower yield. So the Fed becomes kind of useless. And well, if the rate's going down on bonds, we have to lower our lending rate. They really don't have a choice. And now the opposite is happening. So the Fed's going to be raising rates for a little while. But when the recession comes, we'll see what happens. It's going to be very, very interesting. I can't wait to see this one. So this is just another cool chart. Also shows you the US election and Brexit on the chart. Okay, now that I'm cutting down on charts, makes things a lot easier. All right, now let's talk about China. So China is having a bit of an issue. So here are the China exports and China imports. So the Chinese economy has been slowing down, and people like to blame China for everything. Like Trump's been blaming China a lot. So, and this has been happening for a while. I mean, look, this is now going on 2 years. So the Chinese economy is clearly slowing down. And it's not this Chinese economy, right? Like the Chinese can't export if the US isn't importing, right? Or Europe isn't importing. So if other countries are struggling to import, then China can make all the goods that it wants. I mean, no one's buying them, right? So the Chinese economy is definitely slowing down. So because the Chinese economy is slowing down, what have the Chinese been doing? Let's talk about oil next. So the Chinese, over that same period of time, too bad I closed the last chart. But the last chart shows you that the Chinese economy has been cooling since early 2015. And obviously, at first, when things start to cool, you kind of assume that it'll pass, it's normal, and that was this. And then the Chinese said, well, because they control the exchange rate, they said, well, we want to stimulate our exports and let's devalue the currency a little bit. And I literally mean a little bit. I mean, I remember, the pundits, I mean, they like literally, they wanted to start a war with China over this little thing right here. I mean, not realizing that, just look, in 2010, I mean, it wasn't even back to like 2011 levels. And look how far we've gone from 2006. So I understand that China isn't free floating their currency. They kind of have control of it. But they let it rise right here when the economy was doing good. And just like the Fed manipulates the market by raising and lowering rates and buying and selling government bonds and by buying and selling garbage mortgages now and all of these Fed off balance sheet transactions that Bernanke doesn't even gets the right to say to Congress, I don't have to tell you where the money went. So why can't China do it, right? Like if the US can do it, if Europe can do it, why can't China do it? So China dropped the rate a little bit. They dropped it 10%. And if you look at like zero hedge, everyone is like screaming how far China is devaluing the currency. But if you look back for the last 10 years, my answer is so what? And then people are like blaming the Chinese devaluation for the rise in Bitcoin, which I also play down. I'm like, come on, guys. It's down 10%. I mean, look at the euro, for God's sakes. I mean, during that same time, the euro has fallen 8%. But if you go out 1 year prior, these charts are lined up, by the way, as far as like date ranges go. And I mean, the euro is down 25%. since in the last like 2.5 years. And if you go to the peak, I mean, the euro is down 35%. And China, since that time, is break even, while the euro is down 35%. If you go back 10 years, Chinese currency is stronger by 17%, while the euro is weaker by 12%. I mean, this is a big deal. I mean, a lot of countries want to devalue their currency because it makes their exports cheaper, and then more countries would buy from them. Now, the United States dollar going up in value is actually going to be bad for the US. I mean, if the US dollar doubles in value, I mean, it will be beautiful. I mean, if you've saved up a bunch of dollars, you can just go on cruises to foreign countries, you can go on vacation. I can't wait till like the euro is half the value of a dollar. So it's like right now it's 1.06. They're almost at parity. Once the euro drops to like 50 cents on the dollar, maybe I'll finally go to Europe on vacation. But right now, I love going to places like Thailand and Vietnam and even Ukraine after their currency devaluation is great. You go to Ukraine, you can buy bottles of wine for like $3 US, and they're not even bad. It's pretty good bottles of wine. To them, they're kind of expensive. To them, it's like $10, $15 comparatively. But to us, it's if you have the US dollars, it's like $2, $3 for a bottle of wine. I mean, I had a great time. So this is what people have to put things into perspective. Okay, so the Chinese are doing what's best for their economy. All right, let's not save that. All right, so now let's talk about oil. So here's the thing with oil. Here's Iran. So Iran has seriously ramped up production. And I know oil bottomed and turned in November, but it doesn't look like Iran's planning to stop. So they're ramping up production. Don't save. Jumping into oil. Okay. North Sea crude oil. Same thing. So oil storage is going up. And this is back to 2011 levels. Okay. So this is Europe. So when countries start to go in a little bit of trouble, they start to pump more oil. I mean, they don't care what the price is, because if they pump an extra barrel and sell it, it's more money, even if the price goes down. And however, this is the headline that people are looking at as to why oil is going up, because there's going to be a big meeting in Vienna in about 3 days, November 30th. As usual, I will be flying to and from Chicago that day, and this is supposed to be a very big meeting, so there'll probably be a huge movement in the oil markets. If you trade oil, this is what you should be paying attention to. And as usual, like some of the weirdest days in the markets, I'm always on an airplane. And Putin and OPEC have agreed that they're going to cut back on production. And this is the current trade in oil, and why. Remember, insiders have more information than you, right? So by the time you figure out why people are buying oil, everybody knows why people are buying oil. And this is why I love technicals, and I look for those dojis, and I look for those reversals. If you go back to my oil charts, I kind of screwed up on oil. I missed it. I missed both of them, actually. I missed the top by a week, and then it went and made a new high for 1 day, taking out my short trade. If I had a trade, it would have taken it out. And the same thing happened on the bottom. I called the bottom like a month later, and then a week later, it would have broken my stop loss for 1 day, and then it did exactly what was expected. And this happens very, very often to traders, and it's very, very frustrating. And I mean, you either got to have very, very lenient stops or very, very tight stops, and then don't get too frustrated and close the chart. Like, watch it like a hawk, because you can probably get an even better deal like 1 day after that. Okay, so this basically explains the oil trade. Now, I am still bullish oil short term, but I don't think this meeting will end the way they expect. And all of these, I mean, I wouldn't trust any of these people, and they're all going to break whatever agreement they make. And I think oil is going to go down, and it's going to go down quickly because of oversupply, over expectation on use, and new technology is strongly starting to replace oil. So I want to talk about two more things. Oh, I wanted to pull up the actual graph of copper, but I forgot, so we're not going to see it. So this is the RSI of copper, and the price of copper has gone through the roof. And in case you're wondering why that happened because Trump won. And one of the big things that Trump was talking about is he wants to rebuild infrastructure. And rebuilding infrastructure, well, requires copper. And it's a lot of people call it Dr. Copper because copper is basically the backbone of a lot of infrastructure projects. And if producers of copper and speculators that trade copper futures know that a country like the US, if Trump goes through and starts to implement a lot of these infrastructure projects, like replacing pipes, there's like you can look at like there's a lot of water issues in America. Louisiana is like has like brown water, and Flint, Michigan, and a lot of other places. So there's a lot of infrastructure that needs to be done, also bridges and things like that. Our infrastructure is pretty old here. And if that's happening, I mean, they're speculators. It's their job to make money, and they're gonna jack up the price of copper before the government starts buying it. So there you go. But it also got a little out of control, and it kind of fell. And finally, this is why I'm about to explain why trading is so difficult. So on my videos, I was explaining that I expected Trump to kind of win, a surprise win, and it would be a short-term market scare. And after that, we would go up. And I was positioned for it to go up in new highs. But unfortunately, I trade the NASDAQ stocks. And if you read that thing at the bottom, and if you look at the chart, what happened was actually unprecedented. So the white chart is the white line is the Dow Jones, and the blue line is the NASDAQ. And you can see how the Dow Jones went up 1.6%, and the Dow Jones and the NASDAQ fell like 1 or 2%. Oh, sorry, NASDAQ fell 1.6 and the Dow Jones went up 1.2. So let's just say the week after the election was one of the most frustrating weeks of my trading portfolio because I was positioned for all-time highs. Unfortunately, I was positioned in the tech sector and not in the staples. And I mean, I didn't see this coming. So, I mean, what can you do, right? You move on. But this is some of the unexpected things that happen when you trade. And I mean, you don't see this coming. This almost never happens, right? I mean, the last time this happened was in 2000. I thought if anybody would really benefit is the tech sector, kind of like Apple is would be happy that they're now going to get to move $1 trillion back into the US. And probably some of these other companies have a lot of money offshore as well. So I thought this was an interesting chart to show you guys. All right, so that was it for me. Any questions since we're on the live stream? Someone's asking about silver. All right, well, I'm just gonna flip it to silver and see if I see anything different on the same time scale. And no. So let's see. Wow, silver is not as clean as gold. Yeah, so here's the bad news. The bad news is, well, actually, it's going to be all bad news. But the first piece of bad news is that unlike gold, these moving averages may not even cross. So if they don't cross and the 50-week moving average just turns down, got a problem. So again, this drop, you know what? I wonder if I can just draw a big box. Beautiful. So this is what I'm looking at here. An entire, here's a 6-month period. It's a very nasty 6-month period. And the question that you have to ask yourself as a silver trader and investor, can this 6-month period repeat? And if this 6-month period repeats, is it this 6 months? Or is it the next 6 months? Okay. And I don't know. I'm leaning towards it's going to be the next 6 months, because once we clearly close, I'm on an arrow. Once we clearly close below 15, which seems to be a decent support resistance level, just like the 1200 is in gold. So silver is actually holding up a little bit higher than gold, in my opinion, because to me, wait, is this the 1200 level? I'm not even sure. Equivalent, I mean. So if we close below this level, so again, that also means to me, just like in gold, it should have stayed here. Again, silver should have never gone back above 15. Silver should have bottomed out, but it didn't. Nothing. Silver should have done this. And had silver done this, we could have been talking about, a 2017 rebound to new highs, but it didn't happen. So I think this low is going to be broken. And when it gets broken, well, I don't know. It may stop at 10, but well, yeah, I don't consider 12.5 strong support at all. And the reason I don't consider it strong support is because to me, this is more of a channel. And things bounce around the channel. And if they come down into the channel, they usually fall under. And if they go up into the channel, they usually break out. And there's also this mess that I don't even know how to explain this on a technical level. I mean, that's just frustrating. I don't remember if I was trading it at that time. I mean, the only way to explain it is like this, right? So this was the true back test. I mean, a lot of people must have assumed that this was the back test of the breakout. And I mean, they could have profited nicely, but then this would have hit them real quick. This was another one of those like 1-year periods. That's just insanity. And this was the true back test of the breakout. So I guess this could be the ultimate support, but then is this a double bottom with this? Well, maybe, but it's kind of far enough apart that it's not really a double bottom, it's just a second back test. So chances are, I mean, me personally, I would be a buyer of silver at $10. I would be a buyer at silver at 10. Make this green. And I would probably double down around 8. So that's kind of my view on silver. Bitcoin. My Bitcoin opinion hasn't changed. It's exactly what it was in the last video. All right, I guess let's pull up a chart. What are we going to do here? Yeah, the Brave New Coin Liquid Index is having a bit of an issue, so we'll look at Bitfinex. Yeah, we're breaking below that channel, guys. Not looking very good, is it? You see, these channels are so difficult to adjust. They're a little bit buggy. All right, let's get this straight here. All right, well, we're at the bottom of the channel. And if we break below it, then 650 is very possible. 650 would also be a back test of the triangle. So, yeah, I'm still, I mean, look at your RSI. It's still going down, which I guess is okay. Are we at new lows yet? Well, if tomorrow is another down day, then we're gonna make new RSI lows for the month. Your MACD is showing some down pressure, so there can definitely be a little bit of more of a pullback. Segregated witness is still a big issue. Scaling is still very, very debatable. So there's definitely like down pressure on Bitcoin. Don't assume it will always go up quickly. I mean, I've assumed it would be higher by now, and I've been wrong. I've also assumed it would go lower in some cases, and I was also wrong. Now we're still in this channel, which is good. We're hugging the bottom side of this channel for way too long, and very possible we break below the channel. This is kind of what I expected here, to break below the channel and scare people. And then we go up. There were other reasons for this. I just don't want to get into it and spend too much time in the video. Why I called it to be so low here. There were other reasons for that. I guess I'll mention it. The reason is I thought this here was the high and a pullback, and the pullback never came. And then we did this, and this was the triple M Ponzi scheme, euphoria. And I thought this was unreasonable, and I expected it to come down further, and it didn't. And then I expected it to come down further, and it didn't. And then I expected it to come down further, where I was finally right. And then I thought that, well, since I've been wrong so many times in a row on how far it will go down, it's going to go down lower than I now expect it to go. And it didn't, and it kind of just stayed flat. And lately I've been fairly bullish on it. It's just not happening. But I also I didn't realize Bitcoin Unlimited would have that much of a, I guess, propaganda machine behind it. So I mean, I thought that would be a smooth transition into scaling, and instead it's a complete clusterfuck. So, well, not the segregated witness part. That part's great. I mean, that's been tested. It's been put together by some of the smartest developers. But the resistance to segregated witness has been incredibly frustrating, and that's definitely, I think, is holding us back from breaking out. And if we fall, I think 650 is a decent pullback. If we fall more than that, man, that would be a great buying opportunity. At least that's how I will see that fall. All right, I don't know, maybe they figured out the Brave New Coin Index and has an update. It's also zoomed in a little bit. And I'm probably going to end it here. This video is already way longer than I wanted it to be. Now we're still stuck at 717. So though that's about to be the correct price once again, but it should have gone back up to the red line, and then it should have come back down to about 720. So yeah, so this is a bit it's a bit stale by about a week and a half. So how far can we fall? Well, we can fall back to the breakout point. The breakout point here was about 620. So if we fall to 620, that would be reasonable. It would also touch the 200-day moving average, which should be at 620 by the time we fall. Might be at 620 already, right? Because it's already been like a week since this last price, maybe more. So This average is probably already at 620. Another reasonable fall would be right here, like 665, which is probably 675 by now, and that's the 50-day moving average. And but again, so those are my two current support points. The 50-day moving average, which is probably around 670 right now, and the 200-day moving average slash price of the breakout, which is the 620 area. So those are my targets for the pullback. If segregated witness gets in, and this stupid debate ends, then maybe speculators will come rushing in, and they will just bring Bitcoin up to 1,000 and up. All right, guys, on that note, I will call it a night. Good luck trading next week. And I may not do a video middle of next week because I have 4 Bitcoin events in 4 days, starting Tuesday into Friday. So I probably won't do it, but I'll definitely do one over the weekend. All right, good luck and have a good night.